Having a fixed stream of income is the ideal situation for most people. Even for me, if my investments were to give me a returns on a regular basis, it will enable me to do a lot of things and explore new opportunities as well. However, sometimes buying a stock or a fund might be a bit too risky, like what happened with GME. A short squeeze made many millionaires overnight, but also made many lose their life savings in an instant. So for me and the channel specifically, we are all about the multiple passive income streams that will eventually build into a huge source of income for us. And so today we'll be talking about a fixed income instrument called bonds. What's up guys, welcome to yet another video. In the previous few videos we talked about very high octane, high impact and volatile instruments like Bitcoin or cryptocurrencies in general. But today, this video is gonna be for those of you who are a little bit more risk averse, prefers a passive way to earn money and do not want to get too involved in the market because you are not good at trading or you don't want to be too emotional, but you don't want to lose out as well. So in the past we talked about stocks, unit trust, ETF, all this great stuff. These are all great instruments to generating wealth, but they all have their pros and cons in it. However, when it comes to safety, more often than not, you'll hear people talk to you about, hey, why not you buy a bond? So just as a disclaimer, all the investment instruments and companies mentioned here in this video are just for example. They're not financial advice. Please do your own research because these are all my personal thoughts, and always do your own research before putting any money into these instruments or these companies. So what is a bond exactly? A bond is a fixed income instrument which represents a loan made by an investor to a borrower. This can either be a bank, a government, or a corporate company. You can think of a bond as something like an IOU or a contract between a lender and a borrower. The bond also indicates a few things like the date when the principal is due, the interest rate that is due to the bond owner, and whether the interest is on a fixed or a variable term. So who issues bonds? Most bonds are offered to an investor by a government or a company. One of the bonds that I do hold personally is the SSB or the Singapore Savings Bond. This is something offered to Singaporeans by the Singapore government. And to purchase this bond is pretty simple. I've left links in the description where you're able to go to their site and find out a little bit more about what they do and what the bond is about. And like every other instrument, they have pros and cons as well. So here are some benefits to buying a bond. Number one is capital guarantee. With bonds, investors are promised the face value of the bond, meaning to say that if you were to purchase a bond today at $5,000 and it matures in a 10-year period, every single year you have collected interest or the coupon. And at the end of the 10 year, you'll receive the capital that you have put in, which is $5,000. Benefit number two is a fixed interest rate. When you purchase a bond, it will state the interest rate or the coupon rate that you'll be receiving and when you'll be receiving your capital in full. And because the interest rate is fixed, buying a bond can very well protect you during an economic downturn like right now. Number three, they are less risky than stocks. So imagine you buy a stock today and tomorrow the company falls, just like the Lehman Brothers. And when a company faces liquidation, what happens is that it will be forced to pay its creditors, bondholders, shareholders. And in the event of it, here is how the assets will be distributed. Bondholders and secured creditors will be paid first due to the standing contract or collateral. And then the unsecured creditors like the banks, the employees, the government, and the suppliers. Lastly, we have the stockholders or the shareholders, which are further divided into preferred shareholders or common shareholders. And if there's no money left at this point of time, shareholders will literally get nothing. But from this, it kind of sounds like bonds are no-brainers and it seems like the best investment to have. But definitely, like every other instrument, it has its pros and cons as well. So the first thing to consider is the fixed interest rate as well. Similar to the pros of buying a bond, the fixed interest rate can be a double-edged sword. During bad times, a fixed interest rate gives you better returns than any other instrument, but during good times, it might hinder or reduce your yield. The second thing to consider is the large sum of capital required. Like the recent SIA convertible bond, it pays a decent 1.625% interest or a coupon rate. But the minimum sum to invest here is actually $250,000, which is something not everybody could just, take out. In baller like that, yo. So some bonds can be pretty hefty for investments, and some a lot lesser. So like the Singapore savings bond, it starts at like $500 only. So the third thing to consider here is the lower returns versus other investment instruments. So because bonds provide a stable return and capital guarantee in most cases, but in return for this stability, the yield of the bond might not be as great. So for example, the Singapore savings bond, which is a government bond in Singapore, this bond is released on a monthly basis for retail investors like me and you to purchase. And the average return over 10 years for this month's bond is actually less than 1%. So it becomes pretty challenging because inflation is at 3% in Singapore, and buying this bond will literally make your money even smaller. Definitely having some bonds in your portfolio can help generate some fixed income. But based on your personal financial situation, it varies how much bonds you want to have in your portfolio. And if you are a little bit more risk adverse and wouldn't mind having a lower ROI for stability, bonds might be something for you. But if you are the kind that goes into growth stocks like Tesla, Microsoft, Disney, bonds might be an asset that seems very, very underperforming for you. Nonetheless, your investment journey will differ between people like me, your peers, or maybe your family. But what's important is to really put action and start. And thank you so much for watching till the end if you're still watching. And if you'd like to get 5 free trades, do sign up with Tiger Brokers. I've left links in the description down below. And let me know if bonds is something you're having in your portfolios. And I'll see you in the next video. Bye.